Hello traders, it's noon Tuesday, and we are just awaiting very important data from United States. So a short analysis of what can happen and a few trading ideas on two or maybe even three pairs. First, the data. We'll have from about 1 hour and 20 minutes from now the CPI report. CPI, this is the inflation rate, is very important for the Fed when making a decision about the interest rates, how the inflation is high, how high is. We know that we'll have the Fed meeting end of March, so today's data can have really big impact on their decisions. So I expect some extra volatility on dollar and dollar pairs. So be aware that trading major pairs and, for example, gold might be a bit risky today. We already had some data on pound in the morning, the unemployment rate growth, and also the employment change was negative compared to the expectations. So we saw that pound lost a bit to other instruments, and that's why I found pound pair especially interesting today, and I will show you a few ideas. But before we go to the ideas, let me show you also a few things about the CPI which we'll have today. Tuesday, first is the UK, which already we had, and the second thing is the CPI. We see that there's a tendency on the CPI from United States that it's falling. There was a small stumble on December where the inflation has grown, but probably the expectations for today are that probably the inflation will be at about the amount at the range which is about the one which we saw previously. So let's hope that there will be not big changes. Why? Because if there's a big difference between the consensus and the actual, we can expect the higher volatility, the bigger is the difference. Normally, if it would be something rational, then we can say if inflation lower, dollar gets weaker. If inflation higher, dollar gets stronger. The same with gold, but it's hard to say. We'll see after the data. It's no use, guessing. It's gambling if you guess. Let's wait for the data and then we'll see how the market will behave. So if we don't want to be gamblers, if you don't treat trading as a casino, I think that it's good to focus today on crosses, on pairs where we don't have dollar. And my proposition is to take a closer look to pound with Canadian dollar. Why pound with Canadian dollar? Well, on pound and Canadian dollar on daily chart, we have a pattern which is called an evening star. Evening star is a pattern which consists of three candles. First candle is bullish, then we have a kind of a star, this small doji, and then we have another candle which is bearish. And usually after this type of pattern, we see market declining, and we have absolutely perfect evening star pattern at the moment. So what can we expect? If there's a breakout from this pattern, market could go much lower. What more makes this pattern interesting is that MACD starts to fall. Look what happened before on this pair when MACD was changing the direction. For an example, here MACD starts to, here it was growing, but if you see at the moments when it was falling, here it started falling after reaching a really high level. The same happened here, the same happened here, here, and here. Anytime MACD is extended and starts to fall, we see corrections on the way. And I believe that things might happen again. So when I see something like this, there's also a question, will it be repeated? But I think yes. Evening star pattern is a bearish pattern, and this bearish pattern gives us a hint that the market might go lower. Of course, there's always a question, when should we join the market. I think that the best way to find the best moment is going to lower time frames and checking how the situation looks like. And the best, in my opinion, time frame to enter a trend, because we know that there's a downtrend, is looking at the MACD on the 5-minute chart. And if I see MACD getting bearish here, then it will be for me a signal that it's time to join this downtrend. The question is how far should we put our take profit, because let's say that the entry will be somewhere here, and what about where we should place our take profit? Well, we can take a look back in the 4-hour chart, or maybe daily once more, and I'll show you that, or maybe 4-hour chart will be better, that market broke a trend line. This trend line starts from here and it goes like this. Maybe it's not a perfect trend line, but anyway it looks like one. They tested one, second time, 3 times here, a few times here. Now they broke it. So I believe that a good entry will be around this testing, when it will be testing the trend line and then declines. Where should be our take profit? Of course, first take profit should be around this demand zone. So let me take a look what is the level here. It will be the right price. It will be about a 172, which makes at the moment it would give us about 35 pips. If you wait a bit with the entry, if market pulls a bit higher, maybe somewhere here, then it would give us about 40 pips. But what if we plan something long term? If you plan something long term, then you need also to put your stop losses higher. So let's say 2 options. Entering a short position here, you should have your stop loss over this small consolidation. If you plan something long term, for example, you say, okay, I'll keep it for a few days, not only today, and you plan a bigger target for the beginning, I would advise you to put a stop loss over the top, and then after if of course they break this demand zone and go further, you can put your stop loss on a profit already, break even, plus 10 pips, maybe more. So this is one of the interesting instruments which I found good for trading, especially that we also have a divergence here. We have a bearish divergence, which is also something extra for us, because it gives us some kind of a comfort that as long as this divergence lasts, the market will be falling. Of course, the first signal to get out from the trades will be if you see MACD going down, and then you one day, or maybe tomorrow, maybe after tomorrow, you see this green bar. This will be the end of the declines, at least for some time. So you should watch out for this moment, because if MACD goes again bullish, it could be the end of a correction and the beginning of joining the main trend. So I think that trading this pair makes sense if we expect some important data for dollar. CPI data, very important data. So I avoid trading major pairs, but crosses are rather safe, because both currencies will either gain, either lose to dollar. And second pair, which I also find interesting, is pound with Kiwi, pound with New Zealand dollar. I found that yesterday the day closed on bearish, which is usually a good signal for some declines, at least maybe in limited range, but still some declines could happen here. And today's also looks bearish. But of course on daily chart it's not easy to find the best moment to entry. Of course, we must remember that all what started here started with this bearish engulfing pattern. Now they are just on an edge. It might be a signal that they will continue those declines. Bearish engulfing pattern is really interesting pattern. Bearish engulfing candles usually signal that the bears are taking over the market, and after a period of growth, the bears take over the market and start pulling it down. a bearish engulfing candle is really a strong signal. It often happens that we see that market is climbing up, and then comes this huge drop down, and after a small correction they continue. So we call it a bearish engulfing pattern, either bearish outside, but this is the same structure. And coming back to our chart, as I mentioned, on daily MACD started falling, but let's take a closer look at the 4-hour chart. And what can we see here? We are very close to a very interesting pattern which is called head and shoulders. Here we have the neckline. Of course, the neckline is still hypothetical because it still didn't, it's not completed, but we have already the left shoulder, we have the head, and we have the right shoulder, but the right shoulder is still not completed. To complete the pattern we need few pips lower, and then if it happens that the price hits this neckline, very interesting situation. What will happen here? Will they pull back, or will they break down? You know, there's some theory saying that the size of the pattern is the size of the declines. So if to take a look at a theoretical illustration, we have the left shoulder, we have the head, we have the right shoulder. Here's the neckline. Usually, if the neckline is broken, the market falls lower and lower. And then we can say that the theory says that if we measure the size of the pattern, it means the distance between the head and the neckline, it could give us a similar market would fall so low. We don't know it. We must observe the market and trade what we see, not what we think that will happen. First, they need to complete the head and shoulders, and it's still far away from that moment. So coming back to the calendar, remember Tuesday is a CPI day. Tomorrow, Wednesday, we have the data for pound, which might also pull down the pound, either push it higher. And on Thursday, we have retail sales from United States, which is also important. So be aware that trading dollar pace today, it's really a risky trade.